Good morning. How's everybody today? I want to show you, before we pick a pair that I actually would like to recommend, I'd like to show you one that during my research this morning, I think it might be interesting to look at. This is in a chemicals basket that we have, and while I was looking at it, this particular basket has a lot of products that are well correlated and have a very strong RW coefficient. That's all great. And as I was scrolling down it, I found a lot of products that were outside the second standard deviation. I thought, oh, this is great, that we're going to find a lot of opportunity here. But I want to show you one thing here. When I look at the standard deviations, sorted by standard deviations, you're going to see this one product, Poly1, POL. Poly1 is on the side of a lot of the positive standard deviations, and on the negative side, a lot of the negative standard deviations. And if you go check the fundamentals on Poly1, this big move started a couple of weeks ago when they announced the acquisition of another company. When you see things like that, that's a fundamental shift in the value of that company. Probably it's not a temporary breakdown in the correlation. Now obviously as a trader you can say, well, that people tend to overreact, it's probably going to have a little pullback. But that's a whole other style of trading that doesn't have to do with what we do here. So I decided not to go with that. Well, while I was looking at products that were jumping around, however, I found that Brunswick Corporation had also made a jump, not quite as big as the Poly1, but I couldn't find any reason for the Brunswick Corporation. Nothing like an acquisition, that made some sense as to why it was jumping. So let's take a look at Brunswick. I'm just going to use the peers functionality here. I'm going to turn off the non-US stocks, and we'll just make our own basket here this morning. Brunswick as the driver, and see what we can find. Give it just a second for the standard deviations to load. Yeah, so you can see, look at the Brunswick Corporation. Huge. This is basically the same thing we saw in the Poly1, except that I can't find the reason for it in the news. So I'm going to assume that we're going to get some correction on this one here. Well, I'll treat it differently than the last one. Here's one that has a good correlation and a very good RW coefficient. It's Brunswick against Harley-Davidson. So let's take a look at that one. Yeah, this is the kind of chart. It looks like a very smooth chart. Once again, perfect track record historically. Each time it's gone outside the second standard deviation, it's returned profitably to the mean so far. Obviously, it's currently way out here outside the second standard deviation because of that big move with Brunswick. Looks like, this is a very good picture. The drift is upward right now at a little over a penny and a half, which that's not as good as we would want, but the fact is we've only got about 3 weeks because the earnings for Brunswick is on the 24th of January, so we're not going to hold this thing for too long. So we can make a little adjustment here. As a matter of fact, given that time, I highly doubt that we're going to try to go for a return to the mean. The fact is there's a lot of room in here. There's a lot of room to make some profit in the next 3 weeks and get out of this. So let's make the pair. Takes just a moment to get all that data loaded. Okay, so here's the picture. It's been jumping up. We're gonna watch this. Obviously, as I mentioned, we've got the earnings coming up on the 24th, so we're not going to jump into it on the open. But I'm going to watch it and see if it starts going back. And if it starts going back, I'm going to trade it fairly soon because I've only got a couple of weeks. But let's take a look at the hitting probabilities on this one. Let's go with $3 here. If we take a look, obviously, the mean is way down here at 90 cents. $3 is, somewhere around the second standard deviation. but we're way out here at 7 right now. So there's plenty of that's a nice profit number, and it's certainly more realistic. But let's see what the first passage time density tells us. And we'll go for 20 days because that puts us right on the earnings date. So for a $3 target, it's saying the mode is 20 days, which is exactly how much time we have left before earnings. So let's go for 50% here. Yeah, so it gives us a less than 50-50 to get there in 27 days. Once again, same kind of charts we've seen before. You see that the mode is here, but there's a lot of numbers on this side of it, so it's not a 50-50 to get to this point. On the other hand, taking a look here on the 20th day, since we're out here, any of these down here are profitable for us. So I think on the by the time the earnings is coming around, we've got a very good chance of being profitable. So let's do one more target here with $5 instead of 3. Okay, that gives us a mode of 5 days, and 50% of the time 8 days or less. So I tell you what, I'm going to be aggressive here, and I'm going to make this trade. Probably though, I'm going to go for somewhere like let's just say $5 as a target. That's over a $2 profit, and we're trying to get that in just a few days on a very well correlated pair, so with low risk. So a very good pair trade. It's BC. This is a short. Remember, this is a short. So we're going to be selling BC, and however many shares you're going to. So like if you're selling 200 shares of BC, you're going to buy 100 shares of Harley Davidson. So you're going to buy half as many of Harley Davidson as however many you sell of Brunswick. So good trading. This is the recommendation for today, and we'll talk to you on Monday.